Welcome to this week's webinar, the market outlook, with a bit of trading strategy thrown in as well. If you're watching the recorded version of this, it was held live on Wednesday, the 13th of December at 12:30 in the afternoon. So this is a webinar we do every week on a Wednesday lunchtime, and it's split down into two parts. The first bit, we'll take a look at some of the major markets, FX, indices, commodities, and then about halfway through we'll have a little break and we'll do a bit on trading strategy. It's an interesting week. It's always an interesting week, but I mean, we've got, I think later on this evening, we've got the latest interest rate decision from the Fed, the US Central Bank, the Federal Reserve. Tomorrow we've got the Bank of England, 12 o'clock tomorrow, interest rate decision, and then 12:45 tomorrow, of course, the European Central Bank interest rate decision. So it is a week of interest rates this week. No changes expected for any of them, as far as I know. But as usual, it will be what they say about the economies and their outlook for interest rates that could knock markets around a bit. So I think lots of potential for volatility in the next 24 hours or so, starting off with the Fed tonight. But I think that risk warning has been up for long enough. So let's get started. It's just put this thing full screen. What should we start with? Let's start with the pound. I do think this is a difficult market to trade the pounds because of what's going on with Brexit. You know, the negotiations of Brexit, and it just seems to be buffeted by clearly whatever politicians are saying at the moment. So I think it's a tricky one maybe at the moment, the pound. But let's just go back and look at where we are, because I think there could be an opportunity. I think let's take the daily view. So if we maybe take out the noise of the Brexit shenanigans, the recovery that's been in place this year, that's gone from 120 to where are we now? 133.5. So 10% up. Off those January lows, that's still intact. So I think that, the longer-term story for the pound, US dollar, is to be a buyer of dips. That trend very much in place, and it's only if we see that old support go, I think that we need to start worrying. Well, not worrying, or thinking about a deeper sell-off. I haven't drawn that very well, but 130-ish, I think, is the level. So at the moment, it does look like a bit of a buy the dips market. It is an odd one to trade because it seems to be, it's quiet for hours, then suddenly somebody will say something, a bit like yesterday, I think, where we saw this volatility yesterday morning, where it trades up to 133.80, then trades down towards 133.00, and then it just goes fairly quiet again. But the story over, well, the last, I suppose, for this month so far, has been one of decline. But we're getting back to an area, again, Brexit inspired, that proved to be a bit of a turning point. So we've seen a bit of a rally this morning. I haven't taken out yesterday's highs, so arguably still bearish. But I think perhaps the level to watch, if we see much more in the way of weakness, why isn't that picking it up on the wrong? Because I'm drawing on the wrong levels, aren't I? Hang on a second. I think the big level to watch in the pound is that there's low 132s. If we did see it drift off over the next few days, how does it react down at 132? But so I would be at the moment getting ready for it to maybe stage something of a rally from here, but we're not taking out previous days' highs. So I think it's still pretty weak. So short term, bit of pressure, maybe back down towards 133, yesterday's lows. But if we do see a deeper sell-off, how does it perform down here around about 132? I think the more interesting market is the euro at the moment, euro dollar, and just because of, I think, some of the moves that we've seen in recent months. Just if we look at what was going on this year, and I do think there's an opportunity coming in euro dollar, maybe a bit more obvious than the one in the pound. We had that trend from April this year in the euro that had topped out during September around about that 121 mark, but these old levels here held for a bit, and we had a break that would normally be bearish. Then the market pulls back and then breaks and slips below the low after the break. So you'd expect that's the start of a sell-off here, but it never came. So for me, for my money, that move was a false break. So at the moment, I'd be assuming we're going to go back up and test 121. We didn't see much of an appetite to be a seller of the euro down at 116. So for me, at the moment, it's watching it and maybe waiting for it to snap back. So let's look at some levels to watch. I think the logical place for a stop would be below those lows. So the other side of 115.50 at the moment. I think looking for the market to rotate up to 121. But that's a couple of 100 points away from where we are now. Let's flip this over to an hourly chart and take a look. Here we go. So we have tested these old, well, we've slipped below them actually, haven't we, I think? Oh, not quite, no, not quite. Okay. So there's I think our big level to watch off the hourlies. So the November the 21st lows, let's call it 117 for sake of argument. 117.13 looks to be the low. But let's say 117 is the level to watch. So I think an aggressive trade, and I don't think there's any urgency to be a buyer just yet, because it did slip to fresh lows for this down move just yesterday, and we do have the Fed tonight, so we could have a bit of volatility and a bit of sort of shenanigans when that comes out. But I think the first level to watch is 117. How does the market react down here? So if you definitely had to be a buyer today at 117.35, I'd want my stop loss the other side of 117 to see how it reacts. But the more patient and maybe the more sensible trade here is to wait for it to shake off this correction. We have this correction that's sitting like that at the moment, so we'd need a rally through at least 117.70, 117.80, I think that sort of area. But I think the euro's a really interesting one to watch, because I do still believe that we're going to have a go at 121. This is back on the daily chart now, so I think we're still going to have a go at 121. Assuming this was a false breakdown here and these prices have been rejected. For the fans of the stochastics, the 10-day stochastic down here, not quite ready for a buy signal just yet, but if we saw a bit of euro-dollar strength, it does look as if it's going to start gearing up to be a buy signal. So let's see what happens. But I think the euro-dollar is maybe the more interesting market at the moment. Let's look at the two other majors. Let's look at dollar yen. Dollar yen, there we go, dollar yen. Let's look on the dailies. So we have seen it squeeze a bit higher, well, quite a bit higher actually, over the last week and a half or so. But it doesn't really change that bigger picture view for dollar yen. The highs for the year, near enough from January, around about 115, 115.60. Then we have sort of later highs here. So this whole 114.5 to 116, 115.50-ish area has been a real problem for dollar yen. So at the moment, this rally that we've seen, technically from a bigger picture point of view, is just an opportunity to sell, because we've seen the market capped by what has been a big level. Ideally, we'd get a squeeze a little bit higher, maybe up to 114 from here, and that would be our selling opportunity. But I suppose the stochastics down here are backing that up. We are seeing them start to roll over. We did see quite a bit of dollar strength last week, so that's lifted dollar yen up, but it hasn't really changed, I don't think, this bigger picture. And the other one is dollar Swiss. I think dollar Swiss, again, is an interesting one. We had this great trend last week in dollar Swiss. I'll just pick up on it in a minute. But the big picture for dollar Swiss, we have seen it turn around during the summer. Pretty much the same sort of area it turned around last year. Here we go. So this was 2016. So this whole sort of 94.5, 96 area, we've seen, these are weekly candles we're looking at. We've seen again the market turn around. So I think in the medium term, maybe a run back up above parity, back up to 103. But let's just flip this on an hourly chart. Let's have a quick look at this. We had that was the trend last week, which it has fallen out of. Where's my little line? So if I drew it, I don't know, if I drew it off these lows here, it has fallen out of that trend this week, but it hasn't really taken out any sort of significant lows. We've got a big low down here, 98.70. So for me in dollar Swiss, I'd still be looking to be a buyer on weakness and looking for it to go back on the daily chart, back up to these highs from early November, I think, in dollar Swiss. And it's all about just where do you place your stop loss. But I think going back to, I think maybe the more interesting market at the moment is euro dollar, because we had the false break. We didn't have any follow through. The market has pushed higher, broken these odd highs. So at the moment, I would view this as just a little correction. and expecting the market to hook its way up. But with the Fed coming out later on this evening, European interest rates tomorrow, maybe the more sensible approach is to sit on our hands, wait for these things to come out of the way, and see what the trend looks like then. But I think it's an interesting one to watch, euro dollar. Right, let's do our little strategy thing. So let's talk about trend reversals. So let's just bring up my little bit of paper, and I'll do some squiggles here. So I'm sure plenty of us are familiar. Hold on a second, if I can get everything to work. Is that going to work? There we go. Is that bit of paper up? So I think plenty of us are familiar, with the idea of a trend. Let me just cheat and plonk a trend line. So we have a market that's maybe in a downtrend. Let's get that out of the way. Let's get to do that. So our market is doing that, and then we have that sort of thing happen. So we have our trend line in this example that sits on the highs. So the assumption is every time we get a rally towards the trend line, we're looking to be a seller. But of course, these trends don't go on forever, and at some point we get a break. And I think maybe in the beginning, when we first learn about trends, we assume, well, that's it, the market is going to go, it's going to do a Bitcoin and just take off. But that really isn't the case. I think having a bit of patience when we see a trend line break can pay dividends. So I think if we do think it's a break, the logical place for a stop loss in this example is underneath that most recent low. But if we're buying up here, maybe we consider that stop loss to be a little bit too wide. So I think when we see a trend line break, maybe the more sensible, the more patient approach is to see what happens if the market sells off, and if we get that sort of thing where it does hold above those previous lows, maybe that is a better opportunity for a buyer down there with a stop loss like that. We have a better opportunity. So I think if we do see these trend lines break, maybe these sort of moves are the more disciplined, the better way of trading. And I'll jump back on the euro in a minute, because arguably we've seen something like that happen over the last couple of days. But it's just having a little bit of patience. And of course, if we're looking at a market that's in an uptrend, let's change this to blue to be all color coordinated. So we have a market that's in an uptrend. If we see it fall out of the trend, break the previous low, and we want to go short, maybe the more disciplined approach is to wait to see if that happens and it turns down. We get a better entry point with our stop loss above those highs. But also, if it ends up being a false break and the market does this, then we don't do the losing trade. So I wouldn't necessarily jump on trend line breaks as soon as they happen. Let's have a bit of patience and see how the market performs. If we flip this back to a euro chart, hold on a second, because of course it's always easier in hindsight to do this stuff. But let's if we flip this over to maybe a 30-minute chart on euro dollar, if we were looking at that bit of the chart, here we go. Let's plonk the high-low chart. So we had our trend line looking like that. So that was off the December the 3rd highs in euro dollar down to December the 8th. We walk forward, bang. So there was our break. So if we were just religiously trading off trend line breaks, we'd have been a buyer there. And the ideal place for our stop would have been down here somewhere, so below 117.30. So the market does push higher, and then bang, we come back down. Okay, so again, maybe the more patient trade is to wait to see if we had strength. As it turned out, the market, would you have been stopped out? I don't know. If you had a pretty tight stop below there, you'd have been stopped out. But the more patient trade was to wait to see if the old lows hold. So I suppose again, it does, sort of line up with the more aggressive trade now. If you really do think this trend line's over, is to be a buyer now. Where is it now? 37, with the stop loss under that most recent low. But again, bearing in mind it's the Fed and it's the European Central Bank tomorrow, maybe having a bit of patience is the better approach here. So, but I still think the euro is the one to watch. But on trend reversals, I think it's all maybe just waiting to see what happens after the trend line is broken gives us a better opportunity and the chance of maybe stacking the odds more in our favour. Let's take a look at some other markets. Should we have a look at the crazy world of the cryptocurrencies? Let's have I think it's been a bit quiet actually. I think it's been the other things, isn't it? So Bitcoin's been quiet, and the other stuff, is it Ripple and Litecoin have been the ones that have been going crackers. Actually, well, I suppose not. Well, Bitcoin, I suppose, since we last did this webinar, Bitcoin has hit fresh all-time highs again. So a week ago, we'd have been about here, and it has gone surging higher. How anybody thinks this isn't a bubble, I don't know. You know, it obviously is a bubble, but whether this is a bubble that can go higher and higher, I think the US regulator has come out and said there are people who are remortgaging their houses to buy Bitcoin. So let's see how that works out. But you know, it is a market where there's incredible strength, incredible volatility. Just last week, or in the last week, it touched last Friday. It traded above 17,000. Then it was down below 14,000. You know, it is a ridiculously volatile market, but based on the trends, you know, you'd have to be a buyer. I think it's only at the moment if we drop back below the lows from under a week ago, below 13,800, that we have to worry about a deeper sell-off. But I think at the moment it's still a market, these cryptocurrencies, it's incredibly strong. I think what might be interesting from a psychology point of view, clearly we've got Christmas coming up. I do wonder if we're going to see another surge after Christmas, where all these people go home for Christmas and have discussions about how much money they've made on Bitcoin this year. So when everyone's finished stuffing their faces with turkey, they think, well, actually, maybe I need to get involved in this cryptocurrency thing. So I do wonder, post-Christmas, do we see another surge as fresh blood comes into the market and pushes these prices higher? Will that be the last surge? Who knows? But for now, you know, despite I think just the ridiculousness of the moves that we've seen and the volatility, you know, it's clearly a market where people are still happy to jump in and buy the dips. Let's look at something a bit more sensible. Let's go to US stock markets. So let's do the S&P 500. I think we saw, I really have got too much stuff on my watch list because I can never find what I'm looking for anymore. I think we saw, yes, yesterday, yet again, fresh all-time highs. What can you say? I mean, US stock markets still strong. The dips bring the buyers back out. I'm sure plenty of people have been shorting these markets, oh, God knows how long for, but you know, and the market just goes higher. I'll do my usual thing where I look on another broker where you can see sentiment, and normally most people are short the majority of positions that their clients have. Oh, at the moment it's only 66% short. It's normally about 75% people who have trades on this market are short. But there we go. The S&P 500 yesterday, fresh all-time highs. The trend is exactly how it's been since we've been talking about this all year. The trend is definitely up. Let's flip it over to a weekly chart. So again, I think that the trend, maybe the most relevant bit of the recent trend within the bigger trend, is what happened sort of post US elections. So down, I suppose around here, that was the move. This is a weekly chart now, so our weekly trend line looks maybe something like that. So with the market trading at what, 26.64, our trend line's coming in around about 25.50. So I think, you know, whilst we're above that trend line, it's clearly a market that's incredibly strong. Let's look on the daily chart. There's our daily chart. So we get sell-offs, you know, but we're lucky if sell-offs last for much more than 2 or 3 days before the market just ramps its way higher again. Let's have a look on the hourlies for some shorter levels to watch this afternoon. So we've got to go back almost a week, you know, to find major support. You know, we've got to go back. I think that was this crazy move here. I think was all the FBI stuff, wasn't it, that happened a week and a half ago, to do with who said what to Russia and who didn't say what to Russia. But again, you can see the market just, you know, sells off for an hour or two and then just ramps its way back. You know, big support down at 26.20, and then just these little pockets left. 26.50 is the most immediate support from a couple of days ago. What can you say? It's just a market that just keeps on going up. You know, so you've got to be, I think, a buyer on the dips, and when we see a sell-off, it's an opportunity. It's more often than not an opportunity to buy, rather than the start of a bigger crash. Of course, European market's pretty much the same. The DAX has been a little bit boring by its standards over recent days. You know, we saw all-time highs for the DAX, the German market, in November. Clearly, 12,800 has done a pretty good job of stopping any weakness. It's been a little bit flat so far this week. There we go. There's the hourly chart on the DAX. But again, with the DAX, you can see what a good job these sort of the 12,800 to 12,900 area has done. So if we did see a sizable sell-off in the DAX from here, it does look like just another buying opportunity. FTSE 100, the FTSE in the UK, the FTSE, as I often say, is a bit of an odd market, because clearly if the pound does well, normally the FTSE will be under some pressure, because so many of these FTSE companies derive their income from overseas. So a strong pound can put some pressure on the FTSE. But there's our FTSE daily chart. You know, a bit of consolidation during November, and over the last week and a half, it's really taken off. But it doesn't change that big picture for the FTSE. It's still these big levels up here, 7,600. The highs in June, highs again in October, November. We're at 7,500 now. So if you really thought the FTSE was doomed, you're going to have a good opportunity to sell short soon, you know, up against that level. We're 100 points below that level. But of course, it is that time of year where you do get the fabled Santa rally. And it does work, you know, historically, stock markets do well, and the FTSE does well in the run up to Christmas. So let's see what happens. But maybe we'll see another retest of that 7,600 barrier in the days to come. And if you want to go short, that's the level to go short against. You know, if we saw a bit of weakness, stops above 7,600, and let's see what happens next. But you know, if we see these US stock markets carrying on powering higher, there's got to come a point where the FTSE breaks through 7,600. You know, maybe it's this time around, but let's see what happens. But stock markets still positive, and the US still outperforming the European markets. So something I think a bit more interesting than this is what's going on with crude oil and gold. What's happening in crude is interesting, because we're ending the year at fresh highs, which is where we ended last year. You know, we ended last year up around about, what, $55 a barrel on crude oil, which I thought, so it's here, I'm on a weekly chart now, which I thought would lead to more strength this year. We have had the strength, but it's taken all year to come. So we're trading at, you know, pretty much, what is it, the highest level since the summer of 2015. So we've got 2-year plus highs on crude oil. Nothing's changed over the last week in terms of trend. Actually, we've gone just a little bit sideways over the last week, but it doesn't really change that bigger picture for the price of oil. We have our, you know, our trend since the summer looks like that. Our sharper trend maybe looks, maybe off these lows and through here, like that. The most immediate support, I think, well, the most immediate support was a week ago, just below 56. After that, bigger support at 55. Trend line support coming in at 52. So basically, we have stacks of support for the price of oil just below current levels. Let's just flip this over to an hourly chart. Here we go. You can see it's just been a bit sideways over the last week, but lots of good support levels, and previous lows and previous highs do seem to work pretty well on the price of oil. So I think in the medium term, the expectation would have to be for further gains. You know, we've hit 59 so far. You know, 60 is an obvious target, an obvious round number target, and at the moment, any weakness in the price of oil still looks to be a buying opportunity. Let's look at gold. I might be forced to change my opinion on gold, because it has it's broken a big level in the last week or so. So we're back to the sort of where we were in the summer. We're back to July levels for gold. I have to say, I think it's been quite a messy one from a trend point of view. Gold. We've got a weekly chart here. So last year, 2016, we had highs at 1380-ish. Then it sold off the beginning of the year down towards 1100. We've bounced back, but we haven't taken out those highs. And it has been something of a messy year when it comes to the trend, where we've broken out of the trends a couple of times. If I just show you on the chart, if we pick up on this. So we did have our trends from December looking something like that. Breaks out, as you can see, breaks below a major low, sort of here, breaking below that low there, but then ramps its way higher again. So, and it's doing arguably the similar thing again. You know, we've broken, these were sort of pretty significant lows for the last couple of months ahead of 1260. It's broken out of that, and it's broken the trend line. So for me, maybe the last ditch level for the price of gold are these lows down here. Oh, I mean, let me get rid of that. So these lows are around about 1207. So there's definitely scope for a bit more weakness, but assuming those lows hold, I've been looking for recovery, but I think the fact it's broken 1260, that's a big level to break. So in the short to medium term, it's definitely still weak. Here we go. There's our hourly chart. So our trend on the hourlies looks, I suppose, I don't know, it's so sharp, isn't it, at the moment? It just keeps on going down. Maybe it looks something like that, you know, and we don't see really that convincing a rally in gold. So I think for now, if you really wanted to buy gold, sit in your hands is still maybe the best bet, and see if we can put together some sort of strength. But I think that the relevant levels are on the daily charts, and it's these low 1200s from May and July. So it's still pretty weak, I think, at the moment. But I think the one market I'll be watching, the one interesting market, is the euro. I think that's to sort of start wrapping things up. I think that's what I'll be watching. Let's see what happens ahead of 117. We've got these big levels left down there. Bit of volatility over the next 24 hours because of these interest rate decisions. But I think that's maybe the more interesting market to watch. And US stock markets, which just continue to go up. So no change in sentiment there. And the pound is just quite scrappy because of all the Brexit stuff. So I think that's it's a difficult market to trade at the moment, the pound, because it can just move so suddenly on politician statements. So we'll start wrapping things up there as usual. Any questions, drop me an email. My email address is david@tradeafter.com. You can follow me on Twitter for charts and stuff during the week, and that's @Jones Markets. And I've blogged a bit. I'll start blogging again next year about a copy/follow trader account with Aondo. But you can read the stuff I wrote from earlier in the year on tradeafter.com. But we'll wrap things up there. Like I say, the Euros may be the more interesting one to watch, and we'll do it all again in a week's time and see where we are. So thanks for coming along, and enjoy the rest of your day.